So it seems like the media is very, very afraid that the Fed will crash the housing market.
My disappointment is immeasurable, and my day is ruined.
I know what you're thinking. You're thinking,
Orlando, we want homes that are more affordable. We don't want these homes that are $400,000 to $500,000 and everything associated with the home is doubled or tripled. We don't want it.
and I get it. But let's hear out the media of actually why they think that the Fed increasing rates will crash the market, and they don't want that to happen. The Fed could crash the housing market. Investors are getting spooked. Now, you heard the word, investors. Not regular people who are buying home, but it says investors are getting spooked that the Federal Reserve aggressive interest rate hikes could damage the U.S. economy. Just look at Tuesday's sell-off. Now, if you don't know what happened in Tuesday's sell-off, the Dow went down by, I think, 1,300 points. So there was a mass sell-off because inflation numbers came in higher than what most people thought they were going to be.
Really?
Not over here, though. We knew inflation was going to still be a big factor when it came into the economy. And when the numbers came in, gas wasn't going to save us. We knew that over here. But over there in the media, they expected inflation numbers to be way, way lower. When it came back at 8.3%, they lost their minds. And they went out and sold, and everything dropped. You know, it is what it is. One area of growing concern is housing. Interest rate hikes can lead to higher mortgage rates, which could cause people to think twice about buying a home. So far, sales have slipped while prices hold steady, but some economists warned continued historical rate hikes by the Fed could risk crashing the housing market, underscoring the difficult task ahead of the central bank. Here's the thing that I want you to put on your thinking cap. If you don't raise rates, how will you get rid of inflation? I'll wait. On one hand, the media is saying, we don't want to raise rates because if you raise rates, not only will it drop the stock market, but it's going to hurt housing. Well, how do you get rid of inflation? Do you just let inflation just continue to take over and over and over? And next thing you know, we'll be at Venezuela numbers? We don't want that. So if you don't want that to happen to this country, you have to raise interest rates. And there's nothing that we can do about it. You have to raise interest rates. So if interest rates are going to cause individuals not to want to buy a home and prices to drop, then so be it. That's what's going to happen. And here's the thing, guys. You don't even have to take my word for it. If you go back and you look at the meetings that the Fed has said recently, they have said they don't care about housing, guys. All they care about is getting inflation in check. They want to drop inflation down to 2 to 3% in the normal ranges. That's where they want to get inflation. We're at 8.3 right now, which if you take out the CPI stuff and all, it's probably higher than that. But they need to get down to 2%, and we're at 8.3%. So there needs to be some mega pushes when it comes to interest rates. And guys, let me tell you what's going to happen. What's happening, according to Tuesday's CPI report, housing costs rose 0.7% in August and are up 6.2% year over year, the largest increase since 1991. That increase was largely responsible for August's higher than expected pace in inflation. Combined with tight labor market and those high prices give the Fed reason to continue to go hard at its policy meeting next week and beyond. If you read this article with me, and you will see unexpectedly, everything is unexpected. We didn't know it was going to happen.
Stop it.
It just surprised us. Everything is a surprise. But let's take a look at this. It says housing costs rose in August by 0.7%. Who didn't know that was going to happen? I've been reporting month over month that, guys, not only are you buying a house, but you're buying everything associated with a house. That includes mortgages, that includes insurance, that includes taxes. If you want a new refrigerator, get ready to pay double. If you want new flooring, get ready to pay triple. If you want someone to put that in, get ready to pay them triple also. And I've been saying this over and over and over again. And now we're starting to see it in the numbers. CNN is saying, oh, look, the numbers went up by 0.7% year over year. Oh, look, labor has went up. The tight labor market, it's going up higher and higher. But guys, we don't know where this is coming from. And I've been telling you guys, if you want to buy a house, get ready. I'm not saying that you can't buy a house and you shouldn't buy a house. If that's what you want to do, hey, do what you want to do. I'm just giving my opinion here. And I'm telling you that not only are people overpaying for a home, but you're paying double, triple for everything associated with it. And these numbers are showing it, guys.
Do you believe me yet?
But they're surprised by it. And it blows my mind. The Fed needs to see housing costs ease by about 0.5% of a point to reach its ultimate inflation goals. That's not happening, buddy. So get ready. The job won't be easy. Housing prices can remain stubbornly high, even as the Fed works to counteract them. Housing prices are the type of sticky inflation that will not ease anytime soon, says an economist. That's why the Fed will need to demonstrate a show of resolve by increasing the policy rate by 75 basis points in September. That was gonna happen. When these numbers came out, in my opinion, guys, you know this, in my opinion, they should do 100 basis points. Why are we nitpicking 50, 75 basis points? They should have done that long time ago. If you watch my older videos, you will see I said, go 100 basis points. But they're still doing 75 basis points and they're wondering, why is it that the inflation isn't going down as much as we are? Because you're nitpicking it. You know, you're saying, we're gonna only take a little bit here, a little bit there. No, you've gotta attack inflation full throttle if you want to. I get it. You would prefer to take 75 basis points or 50 basis points and look to see what happens in the market before you go full-blown 100 basis points. I get it. But how many times have we went month to month to month and seen,
oh wow, this isn't working. Oh wow, this isn't working. Oh wow, this isn't working.
I mean, how many times do we have to see it's not working? So we have to go a little bit more aggressive. That's in my opinion. But I am not the Fed. I'm just a guy on YouTube, right?
I don't think you have the facilities for that, big man.
Some economists are noting weakness in the housing market starting to peek through. Home sales declined in July for the 6th month in a row. Housing starts, a measure of new home construction, also plunged that month as costs of building supplies remain high. Oh, look at that. So materials are high too. Wow, now it seems like everybody is on the train. Now we can all have this conversation and everybody be on the same page. Everything is high. Everything costs more, which is going to be passed down to you guys. These builders, if it costs them more to build, they're not gonna take that loss and not pass it to you. They are going to pass it to you. But these builders are gonna find out, guys, that home buyers do not want to overpay and then have to pay a high interest rate. It's not going to happen.
You have no power here.
Now, before, people were overpaying, but they were getting 2-3%. And to them, they looked at the monthly bill and they said, I can deal with this. But now we're at 7% range. And if we're at 7% range and you're overpaying, you can cut me out of that. And that's what home buyers are saying right now, guys. And so it is extremely important. We have some things coming down the pike here. I know you guys may not think this stuff is important, but it is. We have China, their economy is kind of crumbling, but they're also, guys, this is good information. It looks like China is gonna go back to normal from pandemic. So that means that they're gonna start using more gas and everything like that. And if China starts back using gas, I can automatically guarantee you gas prices will go back up. So demand was down in China, but now it's gonna go back up, which is gonna affect the world when it comes to gas consumption. So get ready for that happening this fourth quarter and gas prices shooting back up. And if gas prices shoot back up, what will happen to the inflation number? I'll let you guys figure that out. But once again, guys, I hope you got value out of this content. But just so you know, you're not gonna get all the information that you need out of this video. You need to watch this next video. I promise you, it will help you understand more about what's going on in this housing market. I will see you in the next one. Thanks.